All right, everybody. Thanks for joining here. I'm going to get started just with a quick overview. For those that are new, there's a couple new ones here. My previous videos are all up on the United Way website under volunteer training materials. There's the first one, which is an introduction of kind of how the program works and what we're looking to do. The code of conduct video and the interview process. Last week's video was on filing status and dependency. And tonight we're going to be moving on to income and adjustments for income. So in looking at the intake sheet, our first two really kind of covered getting information from the client, and ascertaining what their filing status is going to be, and then do they have any dependents that they're going to be able to claim either as a qualifying child or a qualifying relative. Again, that drives a lot of what we do and how their tax is calculated. So now we're just going to kind of go to part 3 on the intake sheet, which is income. And the following next week's session will be on pretty much part 4, which is the expenses or the adjustments to income, whether they be taking the standard deduction or all the components of the itemized deductions, and then the refundable and non-refundable credits, which are a big part of how the working, the lower working class, so to speak, gets their maximum refund, which is something we spend a lot of time on, make sure we get it right. So I'm going to jump right into tonight's module, and we're going to be talking about income. Some of these slides are a little repetitive, so I may be just jumping along a bit. It's pretty straightforward. The idea is we're just kind of go over the types of forms we're going to see based off the client's information. Again, we're going to be looking at all the different types of income as it pertains to a VITA tax return. Again, how each of these forms feed into the 1040. Again, other corresponding forms for each line, and then how that all gets added into total income. So the 1040 on the first page can be a little overwhelming when you look at especially the different subcategories within item number 1, which is wages for your W-2. All that other stuff, B through I, we really don't see much other than other earned income, and we'll get into that as well. There's other things, down on lines like 4 and 5, IRA and pensions. We'll get into that a little bit later. So again, gross income is all income received in the form of money, goods, property, and services that is not exempt from tax. It includes incomes from sources outside the U.S. We don't really see that, but U.S. citizens are taxed on their worldwide income, or the sale of a primary residence. Even a part of all that income can be excluded. It generally is. Again, if you're married filing jointly, the gain of up to $500,000 is tax-free. Half of that if you're single. Again, we never come into that kind of issue where there may be a taxable issue on selling a primary residence. It may include part of the Social Security benefits received and certain scholarship and fellowship grants. Again, income that is taxable must be reported and is subject to the corresponding tax within the bracket. And income that is non-taxable generally has to be shown on the return, but it may be exempt from tax. And mainly that is because even though it may be non-taxable income, it may feed into calculations, primarily the calculation for how much Social Security is subject to tax. Okay, income is any income received for work, such as wages, business, self-employment income. Unearned income is any income not earned from actual physical work, such as unemployment, income produced by any investments, such as interest, dividends, rental income. Again, unless there's an exception to the tax law, all income is taxable. I mean, I remind people, like if you get what looks like a tax document, that needs to go on your tax return. Okay, what is considered taxable income? This is in the 4012 manual. Basically wages, annuity. I mean, these are all the stuff we see. I mean, annuities are a funded pension, basically. Cash income, canceled debt. We'll get into some of these a little bit later. Gain in the sale of properties, gambling winnings, IRA distributions, jury fees, pensions, railroad retirement's an interesting one. We do have some folks that get railroad retirement. Self-employment income, severance pay, Social Security is a huge thing that we do, and unemployment is also a big. We see quite a lot of that as well. So basically, I mean, it's a lot of things that feed into taxable income. Okay, this is a typical W-2. Again, this is what drives most of our the income that is reported on our tax returns. Item B is the employer EIN. It's important that is correctly input, as that we'll reject if it's not a valid EIN. Box 1 and 2 are right off the W-2, wages and gross wages and federal income tax withheld. All the other lines 3, 4, 5, and 6 will calculate if you don't turn the calculation off. There is many instances where box 1 is different than box 3, and that's usually due to payroll deduction for some sort of retirement plan. There are other supplementary numbers that come into boxes 12 and 14. We'll review those when we start doing some returns. And then along the bottom is your state wages, state income tax, and that all needs to be recorded. Again, some examples here. We've got employer compensation as a W-2. Again, tips, again, if they're not reported on the W-2, that requires advanced certification. Again, the line 1 that has wages is a summary of all W-2s, both for husband and wife if you're filing jointly, or if you have multiple W-2s, as quite a few of our clients do. Taxable interest, okay, this is generally going to be from bank savings account. Don't see a lot of that, but we might see more this year with interest rates up. People are actually earning money in their savings accounts that might be actually generate a 1099. Again, box 1 is what we usually see as far as interest income. The early withdrawal penalty, again, is if you have a CD that you cash out early and you get that dinged off. Some people do have federal income tax withheld, although generally not. It's usually just box 1 and 2. The rest we don't see. Plus, a lot of the stuff at the bottom here for bond, market discount, bond premium, treasury obligations, et cetera, that is actually out of scope for VITA. Again, interest can be reported on other types of statements as well. This is sort of a snapshot of what's called a composite. So this is from like a brokerage account or some wealth management account, but it pretty much just does the same thing. It's just again, just a different way of showing it. We'll get into the dividends next here or shortly. Again, taxable interest can be driven from a checking account, CDs, savings certificates, again, insurance dividends, and U.S. government bonds. Again, if the interest is over $1,500, and we won't ever see that in our world, you automatically get a Schedule B. And again, if you receive less than $10, sometimes the banks will not even bother to send out a 1099. But again, if it's on your bank statement that you add $8 in interest earned, it is your responsibility to actually report that. Tax exempt interest, again, that could be from certain government entities, state political subdivisions, District of Columbia, different port authorities, and other special entities, New Jersey Turnpike Authority, things like that, casino, the Meadowlands area, that type of thing. Again, tax exempt interest gets reported right next to taxable interest on line 2. Okay, we got ordinary dividends and qualified dividends. Again, looks similar to the 1099 INT. The 1099 div, again, generally the dividends are both total dividends and qualified dividends are generally the same if you're in a mutual fund account of some sort. All the information on the left there, again, payer's name, the payer's tax ID number is important to get that, because again, this is all gonna get reported to the IRS and it has to match. You may see total capital gains distributions if this was a mutual fund. Again, the fund manager could have bought and sold stocks during the year, and this would be how that would be presented to the fund owner as their part of that capital gains distribution. Other things in there, again, we don't really see a whole lot, but again, we do see dividends every now and then. Again, that's how they're reported. Again, dividends are just a corporate distribution paid out of earnings and profits. And then, yeah, they all get reported to line 3. Qualified dividends are generally dividends to domestic corporations, certain qualified foreign corporations, which you've held for a specific minimum period of time, usually 1 year. Qualified dividends are eligible for the lower tax rate. All right, so they get taxed at the capital gains rate rather than ordinary income. Right, capital gains distributions, again, that's the owner's portion of the capital gains that were realized when the mutual fund or real estate investment trust sold assets. So again, in those instances, you don't have to worry about cost basis or where it was sold, because in this case, the fund manager or the mutual fund company has kept track of all that, and that's the number that they're reporting to you that has to be reported. Okay. Again, we have a kind of a neat way of handling capital gains distributions. It's very easy to input into TaxWise, and we'll get into that once we start using the software. Okay, IRAs, pensions, and annuities. Okay, all of reported on a 1099-R, and this is pretty much what it looks like. Some things are a little different, particularly a 1099-R from the state of New Jersey. It looks a little bit different than this. But again, you'll have the same type of information on the left, who the payer is, the payer's tax ID number, the recipient's ID number, then you got the gross distribution and the taxable amount, and federal tax withheld. Those are the key ones there. And almost all of our clients, the taxable amount is generally going to equal the gross amount. And we'll get into that when we start playing around with the software, but that's generally holds up pretty well. The other important item on the 1099 is box 7, which is the distribution code. There are quite a few of those. We only see 4 of them. 7 is a normal distribution, so the taxpayer is 65 or older. And the 3 is a death distribution. So in other words, the surviving spouse is now the owner of this particular account. 4 is what is it for? I can't remember what 4 is. One is early distribution. So in other words, if you're under the retirement age, you're going to get hit with a 10% penalty, and a lot of people don't know that, and frequently have 10% taken out for tax, don't realize that there's a 10% penalty. That can be waived if the proceeds are used for a first-time home buyer or for some health issues, health expenses. Again, not all of it is exempt, but a bit of it is. And a distribution code 4 is disability. Disability will work for if you in the case of you're under 65, the distribution will actually be considered earned income for the purposes of calculating the earned income credit. So that's something that people can definitely benefit from. Again, that's why these codes and putting them in is very important. And we'll kind of really spend a lot of time when we start working with the software. Again, box 14 is state tax withheld. In the state of New Jersey, all of these items, whether they're from a pension, an annuity, an IRA, some other profit sharing plan of some sort, that's all taxed at the state level in New Jersey. Okay, again, it's kind of going over, again, between gross distributions and the taxable amount. We're going to get into this a little bit later, especially when we get to topics for the advanced test. Generally, box 1 and box 2 are always filled in as far as what the taxable amount is. because in most cases, if it's an IRA, for instance, you know that that money went in pre-tax in the first place. So all of it is subject to income tax coming out. So that's generally not the problem. And if it's a pension, and again, the only pensions we see are from the state of New Jersey. That's generally been sorted out as they're starting to collect retirement income. Again, this is focusing again here on the distribution codes. There are some that may make it not convenient for us to do. I've never had any situation where that's a problem. We always seem to find a way that what can be sometimes these are miscoded, and that's where it gets to be a bit of a problem if we need to have these rerun by the bank or the investment company who has the product that paid the individual out. All right, Social Security benefits. Again, one of our more popular input items. All right, this is a typical Social Security statement. The number that we want to focus on is in box 5, which is generally the pink box, and box 6, which is the tax withheld. Different things may be in box 5. The one that's the most important for most folks is the amount of their Medicare B premium, the Part B premium that they pay. Again, Part A is Medicare. Part B is the hospitalization, the medical part of Social Security. And basically everybody within a certain income bracket pays the same amount. So you'll get very familiar with what the basic Med B premium is. And that's important for entering because it does flow through to Schedule A as a medical deduction. So if they are itemizing, and again, almost no one does, but it's there if we need that as part of their medical deductions. So as I said here, the number to focus on is the one in pink. You get the Medicare premium in. And again, the calculation for, let's just go here. Yeah, the calculation is rather complex. And the good news is we don't have to focus on it. It takes into account various income sources and your filing status. And again, we don't have to worry about any of that. The important thing to know is that you max out at 85%. So if you have $10,000 in Social Security, the most you will pay tax on is $8,500. The last $1,500 will be tax-free. Right, capital gains and losses. Okay, again, this requires advanced certification because all this stuff will flow into Schedule D. Again, assets that might be bought or sold, sale of a home, mutual funds, stocks or bonds. Again, the 8949 contains the actual transactions. The subtotals for all of those get carried over to Schedule D, and the total of all of these gets reported on line 7. This last bit is incorrect. Transactions that do involve digital assets, it says they're out of scope. They actually are in scope. It's getting a little bit easier these days. A lot of these digital platforms are now providing the forms that we need, total buys, total sells with all the cost basis in, and we can then do this accordingly. It's kind of trickled off a little bit during the first year of COVID in 2020 and 2021. Everybody was at home. We had quite a few people, even in our income brackets, that were playing around with Robinhood accounts and Coinbase accounts, and a lot of that has thankfully gone away. Okay, remember that long-term capital gain is on an asset that's been held for 1 year before it's sold. Short-term is less than a year. And again, different holding periods mean different tax rates. Again, all that's calculated for you as long as we get the cost basis right. And that's the key sometimes. If the cost basis is not on the brokerage account form, we need to work with the client to ascertain why that's not so. Generally it is, but it frequently cannot be. And that's when you need to come up with a realistic idea of what they paid for it. And if they said they bought it, well, I bought it 3 years ago, It's very easy to go on Google and find out what the price of Apple was 3 years ago, and that we frequently would do something like that. Again, we will, again, if there's capital loss carry overs, again, you can only take up to a $3,000 loss above everything else. So if you have, if whatever you had in a given year was $12,000 loss, net of everything else, you can only take 3,000 of that, and 9,000 would carry over to the next year, which is why, you know, we tell people, we do have some folks who've been coming to us consistently, that these are the type of people that really need to keep their records straight, because again, although our software is reasonably robust, it's important that they have their records as well, so they can help us if for some reason we seem to have lost the carryover. Okay, now we're looking at additional income. All right, these are all the things that flow into Schedule 1. Call this like miscellaneous or other items. For instance, taxable refunds, alimony, business income, other gains and losses, rental real estate, gambling, cancellation of debt, jury duty pay, unemployment compensation. All of those items feed into Schedule 1, which feeds into the 1020, the 1040. And some of these items are out of scope, but again, these are the ones that we typically see. Again, not a lot of all of them, but we'll get into some of them. Now, so again, this is where it all of this comes into, feeds into line 8. But again, this is what Schedule 1 looks like. So all of these different items, again, work their way to line 8 in the aggregate. Okay, taxable refunds are very quickly. We really don't have to deal with this often because you only have to report to state tax refunds if you itemize. And again, the only people who generally itemize are a few of our folks that are a little more high income and maybe friends of the program, or some of our volunteers themselves who do their own taxes on our platform. So again, we don't really have to worry about that too much. Alimony received, okay, we actually have a few folks that do get alimony. Again, if the divorce decree was after December 31st, 2018, none of this matters anymore. So things prior to that, again, this is a two-part process where the payer and the payee must report equal amounts. One is as income, the other, obviously the person receiving alimony declares it as income, and the payer is an adjustment to his or her income. And again, doesn't happen a lot, but we do see, I think we had 3 or 4 folks that reported alimony last year. Problem with alimony too is it is fully taxable. So almost every woman, and it's, in our case, I believe it's all women who received alimony, wind up owing taxes because there's no withholding taken out. And so and most of them understand that, but again, it seems to a surprise for a few of them every year. Remember, it's only the alimony is ordered by the court that's reportable. Child support is not reportable. Again, child support is child support. It is that and only that. There's no reason to report that. Okay, business income. We'll spend a little bit more time on this when we look at advanced topics, but you do need to be advanced certification. A lot of the most of the Schedule Cs that we do are one of two types. Either it is the woman, it's generally a woman, who maybe is cleaning houses, or a male who is working for cash, doing like landscaping. So those are like two, pure cash reporting situations. The others, as I mentioned in previous videos, are those that are in the gig economy. So whether they drive for Uber, Lyft, or they do the whole DoorDash, Instacart thing, a lot of the money that they've earned and the expenses that they incurred will be on the app that they'll have, particularly Uber and Lyft. Those are very comprehensive. And so they'll get a combination of the 1099 NEC, a 1099K, which is the third-party payments platform. They may actually get a W-2, although we've rarely seen that. And again, the income may actually just be from their handwritten notes that I've received this amount. Maybe, again, the woman who is cleaning houses has a written letter from the woman who she works for, or a family that she works for saying, I paid her, $100 a week to clean my house or whatever, something like that. And that's good that she has that. And again, any other cash as well. Uber, Lyft drivers who get cash tips, again, real cash, not through the app, could report that as well. Again, we haven't got into as far as income on the expense side. We'll do that when we get deeper into Schedule C. Okay, rental real estate. Again, rental of the typical rental property income is out of scope. We do see some people with K1s who are in a partnership, and maybe that partnership owned a rental property. And so for that those expenses then reported on the K1. So we can do that, but that's generally few and far between. Okay, this is more, that's the same thing. Okay, unemployment compensation again. Come on, there we go. All right. This is again, unemployment is reported on a 1099-G. The state of New Jersey no longer issues these by mail. They haven't for a number of years now. It's all electronic now. Most people of our clients will come in with it on their phone. Some of the older folks who have trouble with that, the only alternative is to go down to the Department of Labor in Trenton, and they will print you off one. But the days of getting one of these in the mail have long gone. Again, unemployment compensation is fully taxable at the federal level, but it is not for the state of New Jersey. A fun fact that it is taxable in the state of New York. Okay, we got other income. Again, these are all other things that feed into this. Again, we don't really see a lot of this, but we do see a few. If you look at things like Alaska Permanent Fund dividends, prizes and awards, Olympic prize money, all these Section 951 stuff, I don't even know what that stuff is. Items T, items U, wages earned while incarcerated. I haven't seen one of those either. Okay, some of the ones that we definitely see are gambling income. Our gambling winnings, including lotteries and raffles. These reported usually being via a W-2G. Lottery winnings for the New Jersey lottery are not subject below $10,000 are not subject to tax at the state level. Again, we see some folks who frequently, if they have a big win, it's been my experience that they also have significant losses. And again, we'll get into that when we look at itemized deductions, how gambling winnings can be offset by losses if you itemize. So again, if the gain is big enough and the loss is big enough, and the way that they're reporting their losses, almost all of the casinos now, all this stuff is done through those loyalty cards or casino cards, whatever they use to play slots and other games. Cancellation of debt. Okay, this is only for non-business credit card debt. We do see a fair amount of these. It's a fairly straight line. Just enter enter this on Schedule 1 other. Again, it is a credit card loan balance was forgiven. Let's just say it was $1,000. Believe that is now recorded, and it is taxable as income. It may not seem to make any sense because you didn't get any income, but the flip side is you don't have to pay out the $1,000 to Bank of America. So how I kind of trying to convince people to get their head around it is, you can it's better to pay a tax on $1,000 than it is to pay the $1,000, and that seems to kind of sway people to kind of come around to that. Again, if it's a lot though, I mean, it could make a difference between getting a refund and then having to owe. But again, that means that you're at least that balance due that you have is gone. Loss of principal resident is another one which we can do. We haven't had to do one of these, fortunately, for quite a while, which I think that's a good thing, obviously. And jury duty pay. If you get paid jury, that is reported as taxable income. Okay, other income here can be also, again, that goes right on the flows into line 8. 1099 miscellaneous can also be issued even if you're not working with like a gig economy position. I use the example of In my private practice, I have an individual who every year he helps park cars over at Ryder during commencement, and he gets like $150. And he also gets one of these 1099 miscellaneous. Those are the type of things that are truly miscellaneous income. They're like one-offs. He's not in the business, if you will, of parking cars. Again, he got this for a one-off kind of thing. You go to you're a musician and you get offered a chance to play the organ at your church or some other church, and that you get a sort of a stipend, if you will, of $100. Again, that's reported, but again, it doesn't require the issue of self-employment tax. Okay, so just recap, these are the types of different income that most we see in the other types that require basic certification. So taxable refunds, alimony, unemployment, advance becomes the business income. Out of scope is some of these other things which we touched on, and farm income and rental real estate. Okay, these are some other, again, this is just kind of a repeat of what I just went through with the various 1099s. Again, if you get paid more than $600, you have to get a 1099 miss. You've probably seen some news lately that a lot of these third-party payers were required to send these 1099s for everybody for even under $600. So if you sold some things on eBay and were paid through PayPal, you were going to have to report that as income. The IRS once again pushed back on that, so we're not going to have to deal with that, thank goodness, at least for another year. Again, this is what the 1099 miscellaneous looks like, and almost always we will see it as box 3, other income. The rest of this stuff, obviously, you can see has no bearing on what we do. Crop insurance proceeds, fish purchased for resale, gross proceeds paid to an attorney, all this nonsense. I don't even know what any of this stuff is. So again, it's almost 99.9% going to be box 3. Okay, relative, that's not going to do. Tax withholding, healthcare payment. Okay. All right, again, that's just more stuff that going through the details of the 1099 miscellaneous. Okay, again, impact on the return. Business income, again, is going to generate self-employment tax if you had net income of more than $400. And we'll take a look at that when we're looking at the adjustments to income. Again, other income in the aggregate is just going to increase your overall taxable income above and beyond whatever is already on there for W-2s, 1099s, interest, dividends, things like that. Other income is generally reported on the MIS. Again, miscellaneous. And again, we're going to cover scholarship income is covered in Module 8. One thing that just to kind of touch on, because I always use this in my sort of final review with clients, is like, are you sure that you told me everything that your income sources? In other words, you didn't have unemployment, you didn't work on the side, a shoebox full of 20s didn't fall from the sky, and everybody always laughs, but the fact is that found money is taxable. There's a very famous court case in which a couple, I believe it was in Missouri, bought a piano, an old piano at some garage sale, took it home with the idea that their daughter was going to use it to learn to play the piano. They finally got around to cleaning it and trying to work on it and opening it up. They found, I think, almost $5,000 in cash in the piano. And at the time, they did the right thing and reported that income, but then they had a change of heart and said, no, they shouldn't have to do that. And it's went all the way up the court chain, and basically they lost. They were right the first time. So again, found money or money earned even in illegal activities is to be reported. I mean, that's how they got Al Capone. So again, money, again, income is reported income unless it's otherwise told not to. Okay, so that's it for income. I'm going to move on real quick and then we'll open up for some questions. So this is adjustments to income. All right, so this is where we want to get to. Again, we just went through all the components that add up to total income. And now we're going to worry about adjustments that get to adjusted gross income. So you want to get that number as low as possible. Take every advantage that you can, again, as you're working through the return to get that number down. Again, any adjustments that you make is going to lower the taxable income and reduce income tax. Okay, what it doesn't do is, again, self-employment tax is a whole separate issue. Frequently, a lot of our people who are self-employed, like Uber drivers, frequently they don't, their net income is so low that it's not subject to tax. However, they will have enough that they're going to have to pay self-employment tax, and we'll get into that. So here's an example. The taxpayer has $20,000 in gross income, $300 in education expense deduction, $50 penalty of early withdrawal of savings deduction, $2,000 in alimony paid deduction, and $1,000 student interest. What is the taxpayer's AGI? In this case, it's $20,000 minus all of those adjustments, gets down to $16,650 is what he's going to pay tax on. So here's the educator expense. We do see these. Again, if you are an educator, meaning whether you're a teacher, instructor, counselor, principal, or an aide for at least 900 hours during the school year, you get to deduct up to $300, make an adjustment of $300 for supplies that you bought for the classroom. And I think we all know that teachers generally spend a lot more than that on books, equipment, supplies, other materials. It does include things like hand sanitizer, gloves, and masks. Remember those days? Again, qualified expenses must be reduced by interest on bonds that you included from income because you pay qualified higher education expenses. Any other distribution from a qualified program to include from your income. Again, all this other stuff, you can reduce those, which again, we never see any of that stuff. What we do see, okay, is again, if they ever got reimbursed, then you have to reduce that amount. So again, if you had $200 worth of expenses, but the school gave you $50, you can only report 150. Okay, the penalty on early withdrawal, if you cash out a CD for whatever reason, you're going to get an early withdrawal penalty. That will also reduce your taxable income. Again, here is the taxpayer says that they had, okay, in this situation, this is one of those, talk to the client questions where if you have an $100 early withdrawal penalty, and in their form 1099 INT, it only says 75, which do you take? Well, you always take what's on the paperwork from the bank or brokerage firm or whatever. If the client is adamant, they're going to have to go back and find another source document that, again, maybe they had another account where there was $25 in early withdrawal penalty. The alimony paid, again, this is all again for divorce decrees prior to 2018, but after 1985. Again, this is all again, this has nothing to do with child support or any other kind of maintenance agreement. This all has to be laid out in a court document. In other words, if I give my ex-wife, send my wife ex-wife $1,000, that's not alimony because again, it wasn't ordered by the court. All right, and again, that's pretty simple. Same thing with the we had talked about child support. That's not included as well. All right, like here's the taxpayer made alimony payments of $2,500. They also made child support payments of $1,000. Again, they can only take the answer for $2,500. Okay, IRA calculations. Unfortunately, given the nature of our cohort, it is very, very, very rare that we will see anybody that would be making a cash IRA contribution. Again, it's a quick way to reduce your taxable income, but again, our folks are living paycheck to paycheck, so that's not going to happen. Student loan interest, we do see this occasionally, more often than not. And you can, again, student loans can be deducted up to $2,500 for the year in which they pay the interest. Again, they must be legally liable for the loan. So in other words, if mom and dad signed for the loan and they're getting the 1099, 1098 rather, you can't take that that deduction. Again, if they file married separate, you can't do that either. Yeah. Okay, there could be some other adjustments. Again, line 12, certain business expenses for reservists, performance artists, or fee-based government officials. That generally requires military level certification. We have had one or two folks that again, they can, reservists can deduct their mileage going to their reserve training area if it's beyond, I believe, 100 miles. Otherwise, there's no deduction. HSA deductions, again, we'll get into that a little bit later. Again, the self-employment tax, again, that automatically gets calculated based on the net income from a Schedule C business. And line 16 and 17 we are out of scope. So again, the health savings account, again, the taxpayer must be enrolled in a high deductible plan, which most folks are these days. It must be covered by that some other insurance. They can't be in Medicare, and they can't be claimed as dependent on somebody else's return. These are the amounts that they can additionally put into the plan total. Most of the HSA contributions we see are what the employer is putting in on behalf of the employee. Yeah, I'm just gonna get that's what I want to do there. All right, so self-employment tax, remember, is the self-employed's part of Social Security and Medicare tax. So for those of us that are earning a W-2, the taxpayer pays half of Social Security and Medicare, and the employer pays for the other half. Since the self-employed is you're self-employed, you're paying both sides of that, but you do get to deduct half of it as an adjustment to income. And again, that's done automatically by the software. Okay, so here's sort of a kind of a complicated scenario, if you will, sort of. Pat and Chris, they're married, they're 27, there's no kids. Okay, so one of them teaches at a private elementary school, obviously was greater than 900 hours in a classroom. The other one is a social worker, their combined income is $6,000, and they had $2,000 in investment income. So here's some other items for their that they would want to talk to us about. That again, Pat had $600 in classroom expenses. There's $2,300 in student loan for one, $1,700 for the other. He's covered by a high deductible plan. It shows that there were $1,200 in box 12 code W. One contributed to a Roth, and there's a $200 early withdrawal penalty. So here are the things that they want to take advantage of. So what can they use? Well, here's what they can use. Obviously, they can take the $300 classroom expenses for the one. The rest above that, he cannot. And between the two of them, again, the $2,500 student loan combination is not per person; it's per return. So if he was single, he could get the $2,500, but combined, they can't. They can only take the $2,500, and they can take the $200 early withdrawal penalty. So what they can't, obviously, is the excess in classroom expenses. Again, box code W in box 12 represents the non-deductible HSA contributions. Again, that was what the employer put in. And again, only traditional IRA contributions are eligible. You can't make it a Roth as eligible. All right, so that is it for adjustments. And at this time, I'm going to go ahead because I'm wrapping up everything I had for tonight's. Oops, hang on a second. Okay, so I'm going to stop.